It's a very important week this week with central banks. Not only do we have the Fed, we have the Bank of England, we have the BOJ, and we have other central banks that we're going to talk about today. Actually, I'm not going to talk about them. I want to introduce you somebody that has been on dealing desks over at major banks for the last 34 years. He has over 40 years of market experience. His name is Koenraad Vanderschrick. He is better known as K-Man, and he is one of the team members on Forex Analytix analysis team. K-Man, good to see you.
Hey, good to see you, Blake. Happy to be here again.
Yes, it's nice to have you back on the Trader Summit, and it's going to be a busy week, right? I mean, everybody's focused on the Fed. I can't tell you how many articles, videos I've seen over the last week that says 25 or 50. I know we want to talk about the Fed, but I think there's other things that we should be focused on too, not just the Fed. Is that correct?
No, absolutely, absolutely, Blake. There's loads going on. Obviously, the Fed will be the main event of the week, but as we do in FX markets, we tend to look at the other side of pairs as well, and there's a lot going on. We've got Bank of England, Bank of Japan, as you say. We've got tomorrow to start with the Canadian CPI. We've got South African Reserve Bank as well coming up. So there's Norges Bank. There's a lot going on this week, but obviously the bulk of what the market is concentrating on right now, where the biggest market is obviously the Fed and what they are going to do.
So let's get your opinion here on what you think we should be expecting from the Fed this week, because obviously everybody wants to hear your opinion, and everybody's searching for an answer. But is it going to be pretty straightforward? Is it going to be binary, quarter point, half point? Market's going to move?
Define straightforward. It could be an absolute monster of an event, really. I mean. Well, I've got the tendency sometimes to downplay a little bit the importance where the market is building it up. We see on X, we see on several platforms, people gearing up towards the next biggest event ever. And I usually try to downplay a little bit in our chat room as well. I say, be careful. I mean, look at what the options are pricing in. They are not really over ecstatic on the event, but this one should not be a dull event, because we are at the start of a change. We are at the start of a cutting cycle, and let's call it as it is. It's probably not going to be one and done. So we are at the start of a major change for the Fed. And to talk about that, if you allow me to, I'm going to share just a few things with you guys and show what we should be focusing on. So let me share my screen, and the first one I'd love to share with you is, because we are going to have the summary of projections again, and this is one where we are going to have to watch for the big changes, right? So the expectations of what the Fed members are going to put forward, and I would like to draw your attention here to two major things. Obviously, the whole market is going to look at this projection of the federal funds rate, but I would say in the slipstream, do not forget to watch what they are going to say about the expected unemployment rate, because as we know, the Fed, Powell in the lead themselves, have been telling us to watch, focus a lot more on employment. We had those hefty revisions that by the BLS. And it's obviously going to be a very big thing to watch. So watch not only what we see in the change in Fed rate projections, but also the unemployment rate. And why is the unemployment rate so important? It is because if we look at their longer run expectations specifically, we have hit those, okay? And those were the June projections. We have hit those. Last month, unemployment rate was 4.3. The last one that we just had right now, this month, for last month data, but this month, we come down a little bit to 4.2. But look, the 2024 projections, the top end of the range was only 4.1. The 4.2 is already the 2025 projection, and the 2026 projection the top end was 4.3, which we hit the month prior to this one. So that's going to be, I'm going to say, the kicker. And then the main event, of course, is what the Fed is going to expect, where they are putting their projections, because the market, and I'm going to change screen here, the market has been pricing in a lot more than what the Fed showed us before. Obviously, the projections will have changed because Powell told us about the unemployment, because the market has been trading this. But if you look at this one, for instance, which is a 30-day Fed funds, and this is a year out. I couldn't show you December 2025 because I don't have it on my screen yet, but they're pricing in an extra 7 or 8 or so BPs up to 97 and a quarter here. So this is an inverted rate. They're already projecting for 2025, already projecting 200, nearly 250 basis points cuts. That is hefty. The market has swung violently towards much deeper cuts. So that makes this meeting extremely important, because are they going to give us 50 or are they going to give us 25? Are they going to give us 25 and announce a whole series, 50 is included possibility to cut, or are they going to give us even 50 and hint at another 50 BPs possible, or and that would be a surprise trade and necessitate a quite a fierce repricing of this one, is Powell and friends only give us 25 and tell us that they are going to go in smaller increments. So all of that is possible this week, which makes it an absolutely monster meeting, because the market has been front running the expectations for a deep cut this time.
You know, K-Man, one of the things, you know, as a currency trader, currency analyst, you know, markets move on interest rates and interest rate expectations. Then, you know, you have a lot of traders out there that really, they're like, well, I just follow price. What everything else is secondary. But I'd beg to differ. If you don't have a good understanding of what interest rates are doing and interest rate expectations, it's kind of like driving with your eyes closed. It's impossible to do. Wouldn't you say the same thing about trading the currency market, not understanding interest rate expectations?
Absolutely. You have to watch what the market is doing and where the market is preparing itself for. So it's not the case of just oh, okay, and I'm going to show the interest rate side of it. This is the 2-year, which those are the yields. So it's an inverted chart as compared to what I've shown now. If you're just a price follower, there are moves here, even in the yield sphere. If you're just a price follower, then transpose it to effects, which this decline, for instance, the last one has impacted the dollar, but this decline here, for instance, has very little impact on the dollar, because the whole yield sphere across the board had been coming down as well. So it's not only price follower and then or PA follower, and then you can decide where the dollar is going to go, for instance. No, you have to look at all the correlations. You have to look at other instruments as well, because this is not purely only a dollar move. And you bring that back to something like the euro dollar, for instance. Euro dollar, yes, it's higher. It's 1% higher from 110 up to 111.20. But we could imagine on such a move that it would be a lot higher, okay, much higher. But that isn't the case. Why? Because also the European interest rates have followed, the sterling interest rates have followed. So you need to keep a bit of an eye globally on what's happening to know what is driving as well. Not only be a price follower, but what is driving things as well. And not only the dollar in this case, although this week obviously is going to be a big one.
So let me ask you this before we start talking about maybe some expectations with the Bank of Japan and the Bank of England. What is your expectation with the Fed for this meeting? What do you think is going to happen? Where do you think the Fed's going to land?
Okay. Well, they managed to confuse me. No, normally I'm I'm not very quickly confused, but now they managed to confuse me, because if I look sheer at the sheer data, yes, we had those big revisions on the employment index, and yes, we are hanging towards the top end of their expectation range. But I find this expectation range of them, if Powell and friends expected this rebalancing to be happening, why such a tight range? I thought their range was a bit too tight. So, but we are still within the range, we can say, and we still created some jobs, over 100,000, the last number. And if you look at these kind of core sticky inflation, I think 25 is my base case somewhere. But then you have those little messages being sent out, whether it be by Powell himself, saying that they would not let derail the jobs market, that they would support the jobs market, so extra weakening is not welcome. And then that little message being sent out last week by, was it on Friday?
Tim Rose.
Via the Wall Street Journal, right? Saying all of a sudden that the 50 may be on the table. So, you know, they managed to confuse me. So I'm going to go into this meeting with, let's say I'm 51%, 25 BPs, 49.50. But to me, the most important is, what is Powell going to say for the future? And there, I think the market ran far enough right now. Because we are now really pricing in a lot of cuts. We are pricing in fast cuts, very fast cuts, and that's where he may call this move to a bit of a halt, not a reversal completely, but a bit of a halt. And we know what that means when you need to reprice. We have seen it so much, the rebalancing of expectations that we saw in the past in the bond markets, and those are going to be the drivers. Yeah, the bond market is our driver, the first thing that we have to look at. We could see some need to reprice the fierce cuts and the fast cuts, especially, that this market was trying to price.
And this wouldn't be the first time. I mean, last year around the same time, we had a very similar situation where rate cuts were so aggressive going into the beginning of the year, and the market had to reprice everything. That was what, 7-8 months ago. This may be the case once again. What you're saying.
This one exactly, yeah. You remember this one where what is that big investor who said the top is in rates, and we went down, but then we nearly had a full correction, right? So yes, those moves have happened, and in a relatively violent way, because I will say this, and I've said it already on some of the shows, or even in our room. It could end up being again a little bit of a pain trade, because if you're all watching the whales on one side of the ship, and then all of a sudden there's a bigger whale appearing on the other side of the ship, and everybody moves around, there's not always the time for everybody to move around, to move to the other side of the ship at the same time. So if there is a forced rebalancing of expectations, that may create a bit of a nasty move, and that is what I'm going to keep in mind going into this meeting. There is this potential of a bit of a forced needing to readjust once more the positions.
All right. Well, you know, like we talked about before, K-Man, and I don't want to. I know we could probably go on and on and on about the FOMC. Give us a few tidbits on what you're thinking with the Bank of Japan, the Bank of England, and maybe the Norges Central Bank, and maybe the South African Reserve Bank, if that's something that you want to talk about too.
Okay. Look, the Bank of Japan, to me, this is a meeting where there is no change, and for a couple of reasons. And if you allow me, I don't even need to show the dollar yen. Everybody knows what the dollar yen has been doing over the past month or two. Look, the expectations here, and I'm taking the 10-year just out of facility, is being relatively quiet. I don't think the Bank of Japan is moving this time. There will be, I think they are going to say that they are still monitoring the effect of the past hike, where they went 15 BPs. There is also a political reason why I think that they are not going to change now, because I don't think that they want to recreate a situation, even if it wasn't of their own doing. I mean, people were blaming the Bank of Japan for that big drop in dollar yen, but I mean, the whole majors yield sphere came down at the same time, and so that was the accelerator for the yen. I think the Bank of Japan was just a perfect excuse to make it happen. But we are the 1 week. We will be 1 week before the vote for the change of the leadership in the major party in Japan, the LDP, and I don't think they will want to risk um, a repeat of the event, because this time, if you would, let's say, for instance, they hike and the dollar yen goes down another 10 big figures, then people would point fingers at them this time. So I think they will hold back, monitoring the effects. But we heard from most of the central bank members, the Bank of Japan members, that they are willing to continue with the process. So I think it's only a delay in the affairs. All right. Yeah, and also people that I've been reading say like, oh, there won't be anything before December, or even nothing more this year. But I beg to defer a little bit there, because I think next month, October, we will know the LDP change, and we will know who should become the next prime minister to replace Kishida. And it's also a projections meeting, and they may be very tempted to add a little bit next month.
All right. What do you think? What do you think about the Bank of Japan, or excuse me, Bank of England?
Well, that's another one which is really limit border of the no change. On Wednesday we will have the CPI, and I think that could actually be a decider, even together with FOMC. I know that they are not interdependent. I'm not saying that, but imagine the FOMC does 50 and the CPI comes in slightly off the mark in the UK. There will be no reason for standing pat, and it's really going to be, we are really on the verge of, and I would be tempted to say that the chances of a 25 BP cut are perhaps slightly higher than what the market is expecting right now. So I'm not going to go into the meeting bearish. I'm not going into the meeting ultra bearish sterling, but I would be just a little bit cautious, because we could be in a situation where they are tempted to do something. And if we look at the cable, for instance, we are nearing in, because of the dollar weakness, we are nearing in to the prior highs here, 132.65. If they don't do anything and the Fed decides to go, I think there's a fair chance that we are going to see a higher sterling, because that would put really the Bank of England on top of the majors interest rate sphere. And one that we all are keeping a very close eye on, a very, very, very close eye on, is euro sterling, of course. The ECB having cut, euro sterling is hanging around those low 84s, and I would really say that if they don't do anything, this probably is going to be the push to put euro sterling lower again, because the market is I haven't seen the latest numbers, perhaps a little long sterling. I know that they were longer sterling, and perhaps having taken that long bias a little bit off over the past sessions. But a Bank of England which stands pat, there are also reasons enough for them not moving. And imagine that CPI is a little bit stickier than expected, especially the services CPI, then they would probably keep on hold. If that would happen, then I think euro sterling is ready for its next leg lower, somewhere mid to low 83s, for instance, for a start towards 83, the figure. That's a real possibility, okay? If they would cut, then I think we need to look at perhaps other pairs. Okay, this is probably going to go back closer up to 285 for a starter. And cable may be finding, depending on what the FOMC does, maybe finding a bit tough to retake the prior highs and or on an FOMC could go higher. But then if Bank of England cuts come back closer to 131, perhaps even 130 again. So these are the possibilities I think that we have to take into account on the Bank of England. We are just in between a hold and a cut, but I think the cut possibility will increase if we get even a slight miss on the CPI. And I would even say, Blake, it is possible that they cut in sympathy if the Fed would go 50.
Okay, and I mean, in sympathy, so I mean, I guess the risk here is that you could actually have you know, a sterling that you know, might forge a top around here in the event that let's just say, because the Fed's going to be a day before the Bank of England, and when the MPC makes their decision, if they end up cutting it for sympathy, let's say the dollar actually gets hurt because they cut 50, sterling rallies above resistance, and it might actually reverse if the Bank of England cuts in sympathy, is what you're saying could happen.
I think it is a real possibility this time if that would be the case, because I do not think that the Bank of England, knowing Bailey, will want to remain tighter than necessarily for longer. Okay, no, of course sterling can rally because it's a stronger currency is an anti-inflation. Is a way to combat inflation, but let's not let's not overstate the importance of the currency impact on inflation, because it really needs to move 5, 6, 7% before it really has a material impact on inflation. But it could be the case that we are doing this, like you get that move over 133, and then all of a sudden peter out and take the other way if the Bank of England would go.
All right. Well, the one central bank that's meeting just before the Bank of England will be the Norges Central Bank. Are you expecting any significant moves there? I mean, U.S. dollar Norwegian krona has been kind of in a tight range in the last several weeks. So, any expectations there?
It is, depending on how you look at it. It is it is in a range. Tight. Okay, it's still like a 4 or 5% range, this one. But we could argue we are trying to consolidate, you know, after a period of high volatility, driven by energy, driven by Norges Bank. Let's not forget that they are still selling Norwegian kroner, even though a small amount every day. They are still selling some Norwegian kroner, and here we have seen obviously the dollar come off again. But we are trying to consolidate in this kind of triangle. They should not be changing anything. They said in their prior statement that they expect rates to stay around 4.5% for the rest of the year. I haven't seen anything in the data to really counter their arguments too much. So I think that is a meeting that is going to be neutral. The only thing is, again, do we see a risk somewhere of them saying like, well, we don't want to create too many waves. So if others are cutting, will they be tempted to go a little more dovish than the neutral standard they have now? This is possible, but I don't expect a change of interest rate there.
All right. Well, K-Man, I want to thank you so much for being here with us and getting us up to speed with the FX market. Is there anything else that you really might be thinking about in the weeks ahead that could influence what the FX market's going to do? I know next week there are some central banks that are meeting, but anything of importance that you think currency traders should be thinking about?
Okay, if you want to have a look at something else than the dollar, for instance, or the sterling. We do have the Australian employment data out on Thursday as well, and next week the RBA meets. We know that so far the RBA has been one of the hawkish central banks, really remains sticky in their view, stuck to their guns where others were calling for perhaps a cut. That has not been the case, so they are still one of the central banks that could remain towards the hawkish side of the whole central bank spectrum, providing that they have a decent employment report come Thursday. So this is one of the other currencies that I'll be watching. But in the global spectrum of things, Blake, I think we are now slowly heading into the fourth quarter nearly. It is decision time for a lot of investors. We have seen that over the last quarter of the year, we have seen very big moves in FX markets globally in the last years and during that last quarter. And it could be that the Fed gives us that really that impulse for the people to put their positions in play for the last part of the year, and we could be ahead of like big trends, whether it be up or down, which the whole market expects. But if Powell isn't giving the market what it expects, it could be the case that the dollar is not going to end the year on such a soft note.
All right. Well, K-Man, I appreciate you once again spending time here at the Trader Summit with the Trader Summit community, excuse me. Tell us a little bit about some of the shows that you do with Forex Analytix and the best way to follow your work.
Yeah. So we have a daily morning show, which is called The Flow Show, together with Ryan. Ryan is the Little Stone is the host there. So we're doing our every morning flow show that is at 10:30 UK time. So 9:30 GMT nowadays, which is in the middle of your night, Blake, but for the very early, and we have a few, for the very early Americans, you can follow us at 9:30 GMT every morning, and then I'm obviously joining Face What I Can as well, your and Dale show every day, and yeah, that's about it. And we also have our coaching program still ongoing. People who want to learn more about markets, learn more about fundamentals. My program is quite based on fundamentals, helping the people to understand what's going on behind your screen when you see all the numbers change. What's going on behind the scenes? What is the driving? And I'm also helping people in perhaps having longer term positions, or talk about options if they would like, and that is really the bulk of my program. And yeah, that's it.
Well, thank you very much, K-Man, for spending time with us. And if you guys enjoyed having him here, make sure you tell him down in the comments below how much you appreciate his knowledge, and give him a thumbs up and subscribe to this channel so you don't miss any of this exclusive content. I will have K-Man back here on the Trader Summit. So K-Man, have a great day, and good luck trading through all these central bank decisions this week.
Thank you, Blake. You too. Have a good day.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.